Hey everyone, welcome to this explainer on SA 710. Today, we're literally replacing your textbook with a high-yield, structured breakdown of exactly what you need to know for your exam. So, if you've ever stared at a set of financial statements and wondered, wait, what is the auditor's actual responsibility for those prior year numbers sitting right next to the current ones? Well, let's master comparative information together.
Here is our roadmap for today. We'll start with the basics of comparatives, break down the two main types, walk through the auditor's action plan, and tackle some special audit scenarios. Then, we'll wrap up with reporting and documentation and lock the whole thing in with a super handy ICAI exam mastery trick.
All right, Section 1. Basics of Comparative Information.
So, what exactly is comparative information? Basically, it's just financial information from one or more prior periods that's included in the current year's statements purely for comparison. Imagine you're looking at a company's data. You've got the current year, say 2026, showing sales of 12 crore rupees. And sitting right next to it, in the exact same view, are the 2025 sales figures of 10 crore. Those 2025 figures, that's your comparative information.
Now, we don't just glance at those old numbers for context and move on. Because they heavily influence how a reader understands the current year, the auditor's core objective under SA 710 is basically a two-part mission. First, you've got to obtain sufficient appropriate audit evidence about whether that comparative information actually complies with the applicable financial reporting framework, and second, you've got to report on it appropriately. So evidence and reporting, that's your anchor for this whole standard.
Moving on to Section 2, two types of comparatives. Okay, pay close attention here because this distinction is absolutely the most frequently examined concept in SA 710. There are two very distinct types of comparative information. First, you have corresponding figures. This is where the previous year's figures are presented only for comparison with the current year. Because of that, the auditor expresses an opinion only on the current year. By the way, this is the standard setup under the Indian Companies Act. Then, on the flip side, you have comparative financial statements. This means complete, full financial statements for both years are presented side by side, which actually requires the auditor to express a separate opinion on each year individually. If this scenario pops up on your exam, anchor yourself to this golden rule from the ICAI materials. It's super simple. Corresponding figures equal one opinion for the current year. Comparative financial statements equal two opinions, one for the current year and one for the previous year. Seriously, repeat that in your head, write it down, and do not forget it.
All right, Section 3. The Auditor's Action Plan.
Out in practice, how do you actually audit this stuff? Well, you follow these 5 steps sequentially to build your conceptual mastery. Step 1, literally just read the comparative information. Step 2, check whether these prior year figures agree with the previously audited records. Making sure the numbers haven't mysteriously shape-shifted. Step 3, ensure the accounting policies are consistent, because comparing apples to oranges is completely useless for whoever is reading the report. Step 4, if any prior year figures had to be restated, maybe due to a prior period error or a shift in policy, you've got to verify those restatements. And finally, Step 5, evaluate the disclosures to make sure they actually meet the framework's requirements.
Section 4, handling special audit scenarios. Out in the real world, things are rarely perfectly straightforward, right? So picture this. What happens if you walk into a brand new audit engagement? You see the previous year's numbers sitting there as corresponding figures, but they are completely unaudited. Like, no one has ever verified them. What is your exact move here? Well, the standard gives you a really clear way out. You absolutely must state in an other matter paragraph that the prior figures are unaudited. But, and this is crucial, you have to carefully clarify that your current year opinion is not modified solely because of that past status. You're basically telling the users, hey, I didn't audit last year's numbers, they're just here for comparison, but my opinion on this current year's data is still 100% solid. Alternatively, what if another auditor did handle the previous year, but they issued a modified opinion, a qualified, adverse, or disclaimer of opinion? Your job as the current auditor is to investigate the nature of that modification. You have to figure out if that same messy issue is bleeding over into your current year's financial statements. And if it is, you've got to consider its effect on your current report and modify your opinion appropriately.
Section 5, reporting and documentation.
Once all your evidence is gathered, a massive point of confusion for students is mixing up standard reporting with comparatives. Please do not confuse SA 700 with SA 710. SA 700 is your main event. It deals with forming the current year audit opinion and your primary reporting. SA 710, on the other hand, specifically governs the previous year's comparative baggage, those corresponding figures and their specific disclosures.
Also, if you get an exam question on documentation for SA 710, securing full marks means you need to list out some very specific things. You've got to make sure your files record the audit procedures you performed, the actual agreement of the comparative figures to past records, your checks on accounting policy consistency, the evaluation of disclosures, and of course, your final conclusions. Remember, if it isn't documented, it literally isn't done.
And finally, Section 6, ICAI Exam Mastery.
Let's lock in everything we've talked about today so you never even have to open the textbook again. We're going to use the compare memory trick. It contains literally every single keyword in auditor responsibility you need to recall for this standard. Ready? Let's break it down. C stands for check comparative figures. O reminds you that your opinion depends on the type. M means match with previous audited statements. P reminds you that the previous auditor's report must be considered. A stands for accounting policies, which must be consistent. R tells you to restate previous figures if required. And E stands for evaluate disclosures. Master the word compare, and you can write a flawless answer to basically any theoretical question ICAI throws your way.
To wrap things up, I want to leave you with a real-world scenario to think about. Before your exam, ask yourself this critical application question. If a change in accounting policy forces a massive restatement of last year's figures, how confident are you in auditing those new disclosures under SA 710? Would you know exactly what to document and exactly how it impacts your single opinion on the current year's corresponding figures? Think through that process. It's the absolute key to moving from just memorizing to truly mastering the material. Thanks for joining me for this explainer today, and best of luck with your exam prep.